Now the next is the equity method. Same, he will ask the information. Earlier we may mention the no, now we'll mention the yes. So additional information he will require. See, if in previous slide where we seen the no, I'm just moving here. If we mention no, so the relevant section of that part, it will not open. From the return have the lot of section, but if you say no, that relevant section will not open. If we offer the select, as currently if you seen here, we are selecting the yes, then the return additional information will require. What are the additional information? Here, the additional information from that investment, we have to add it over here. The profit and loss from that equity method. Now, again, the next part on the same pattern, now we see in the equity method investment they made. If we say no, the return, that relevant section will be remain closed. If we say opt for the yes, this is the actually, what is this? This is the election. If you, normally we are many times will use the word election, okay? The election standalone is a couple of election that is there. But here, election also will be like that, yes or no. Which option you want to choose. But here we are saying the in terms of the equity method, if we opt for the yes, we have to provide the relevant information. How we provide this relevant information? How we can provide this relevant information? If our books of accounts are prepared appropriately, in previous section I was highlighting the chart of account. If our books are prepared in a way that can give us information in appropriate way, then we are able to prepare our corporate tax return. Now the next is the unincorporated partnership. We already seen unincorporated partnership in very detail, and we have the understanding. Mr. Adnan, we this topic in detail we did not discuss that you are requesting, but I'm highlighting this 2-hour session is there for better understanding. Please spare some time and go through that. Then you will get the answer and you will have the understanding, and then you will do the needful in the financial statement also, in the books of accounts also. Because as long as you are understanding the whole topic, then you are able to look in your organization, or support your client. But random information, yes or no, no. This is an inappropriate way to understand the topic, understand the taxation. Because if you understand the taxation appropriate way, you can apply in appropriate way. Because tax have each yes or no, there is a backend. Backend, the comprehensive understanding, comprehensive the legislation. If you understand that, then you will get the appropriate answer. We have the experience with the other consultant as well, and as well as we have the experience with the tax authority also, FTA also. We meet their tax policy expert also whenever we ask the similar question, because many person they are going over there to get the answer. Okay, this is our organization issue. This is we are facing. What we do? They do not answer in that way. You choose option A, B, C. No, he will give you the reference of the relevant article, relevant legislation, and he will explain that legislation. But he will not answer the way that people ask, okay, because the consultant or even the FTA, they are not aware what is the organization business. Once you report, you prepare and submit, they will ask further queries. That's why in the return, they ask separate information or separate question. But you to understand better, please go through that session and you will have the better understanding. You can give your management suggestion also, whether this is the which option is better for you. Because this is a management decision. Why the management decision? Because each organization, policy, procedure, and the way of operation may differ. Their priorities may differ. But within the legal means, which will be suitable for you. Hope you will spend time on that. Let's move to the next. Unincorporated partnership. If we already seen the unincorporated partnership and in why we need it and where we need it. We already understand the comprehensive, but in return, If we opt in the beginning, yes, you are part of the unincorporated partnership, then here it will ask the further information. But if you opt for the no, written additional questionnaire will not open. If you opt for yes, the additional questionnaire will be open. So now these are the additional information from unincorporated partnership that to be fulfilled. So keep in mind, update your books of account. If you are owner of the company or the group of the company, they have, this is not only for natural person, or this is part may apply on the juridical person, LLC companies as well, because they might have the joint venture with another corporate for project based or many other firm. They do some, they normally we call the JV, joint venture. Based on that, they do some projects together, and that fall under the unincorporated partnership, subject to the appropriate information. That because you, when you have this idea, you go and read the document, you will understand whether it's the unincorporated partnership or LLC, because that we already discussed in previous section in very detail. Now, here the next point is the taxable person recognize and any, taxable person recognize any realized and unrealized gain and losses on financial statement. This is again, I already mentioned, is comprehensive topic available. You may have the better understanding on that. We will, because I'm moving quickly, we have to move our topic to reach our topic. Now the next part is the, if we offer, yes, he will ask this information. The why this is important. Here you will see the return this query. If you say yes, the same. If you say yes, then he will ask the gain reported in the financial statement that would be subsequently be recognized in the income statement. Because as of today, whatever the return information in the previous year and this year, in the first return, two information you have to be updated. Why? What some information is coming as the opening balance and some information from the closing balance, and such information may have subsequent impact. You have to give, okay, if you have some amount of unrealized gain and losses today, but you go on realization basis, you have to notify. You have to notify, yes, in future I will receive this much gain. It may change, but as of now, you have to give the information. Anyhow, let's move to the next point, that is a transitional adjustment. Again, the transitional adjustment we will not see in detail. This is the one of the additional topic that not so far we seen that. Qualifying immovable property. Here you will have the understanding purpose. Now, if we say yes, the below information will be appear. Accounting on the adjustment in respect of gain on elected immovable property owned prior to the first tax period. Now, this first tax period, whatever the properties of the organization or the national person they have to register their, they have to do the evaluation. There is a two method. We will discuss in detail what are the two method and which way you will go. Because you have to log the property value. Either you go on the cost model and log the property value, you can take the revaluation and give to the FTA in the first return the valuation. So this is the what is saying, the immovable property owned prior to the first tax period. Maybe the property you owned for 1 million before the first tax period, and the life of the property, the 20-year, you already spent completed the 5 year and depreciated for the 5 year. Now remaining is a 15 year. So later on, you can adjust the depreciation or take the benefit from apportion base, because whatever the gain at the disposal, you will apportion over based on the asset life. Whatever the apportion before tax period, that will be untaxed. Whatever the after tax, that will be taxable. Even this complete corporate tax return demo already uploaded on the YouTube as well. Here I'm taking the same slides from that demo only, because I prepared in September 2024 that return demo and shared online for better understanding, but I'm now adding the slides from the same demo. Here, again, if the qualifying intangible asset, again, you may not understand what are the qualifying intangible asset, but now you are locking in your mind, okay, these terms are this area we need to invest our time and learn. What is that qualifying intangible asset? So below the why we need it, because we have to give the information in the return. So this topic you note down, and you have this time you may spend from your side also. Now the qualifying financial asset and the liability which are on prior to the first tax period. Again, if you offer no, there will be no further questionnaire. If you offer yes, the further questionnaire will be open. So mostly we've seen the asset prior gain and loss. This is the two common question mostly they will ask for the first tax period, on prior to the first tax period. Okay, what is this? This is opening balance. Opening balance. What are the opening balance from the last financial year? That will be the opening balance of the accounting first tax period. So you have to do the analysis, working comprehensive, and keep the figures are ready. Realization basis adjustment. Okay, now this is the realization, because previously he taken the from previous year realization basis. What are the balances are there that will be adjusted in the first tax period. Now is unrealized gain and losses recognized in the accounting income in the current tax period. Again, the same information. If we offer no, he will move forward. If we offer yes, then he will ask that information. We have to provide to the information. This is the point where the critical and our first return is the most critical, where we are considering to prepare our base for the future compliance, for the future appropriateness of the company. Because maybe most of the professional they are working in, they are belongs to the same profession from the accounting and the taxation. If they are not active in the taxation, they have to do the consideration while preparing the tax return. They have to understand and learn all this topic. Why? Because as a part of study, we might have studied the taxation, but as a practical experience in UAE, we did not go through that. So do the due diligence from that point of view also. Let's move to the next part also. It is now realization basis. It will be couple of adjustment. It will be continue. As already mentioned, you can understand this concept very well from the online YouTube channel. That's the same just for our understanding, because whatever we gonna spend over here, that is only for getting the framework only. Here we seen the adjustment in respect of unrealized gain and losses. First, we have to understand what are the realization basis, and then we have to understand what is the unrealized gain and losses in the first tax period, opening balance of the first tax period, and what are the unrealized gain and losses during the year, and what are the unrealized gain and losses at the end of year that will have the impact and the in future year and subsequent year when the asset is sold. In the same way, same pattern depreciation of the other adjustment in the same fashion, we are continuing on that. Now, exempt income, we will see the quickly the exempt income, dividend or the profit from the resident person. We already seen the dividend or the profit distribution from the resident person from the UAE company is exempt because that will be paid after the corporate tax. If we receive from the foreign juridical person, that we have to see is meeting the condition of the exemption or no, because the local we already seen is exempt on all the way, but from the foreign juridical person, we have to test the participation interest. The participation interest, that no, just for basic understanding, we have the criteria as per the FTA. There is a compliance 4 million or 5% of the shareholding of that company, because minimum must be the 4 million and at least the 5%. So there is a detailed understanding on that. We will dive into that. If we say opt for the yes, then he will ask the detail for that. FTA will require the detail from the how much the participation interest and income and losses. Here you can see the income derived from the participation interest, loss derived from the participation interest. Why they are asking? Because maybe one company or one taxable person have many participation interests. From one participation interest, they are getting the we can say the income. From other, he is getting the loss. So that's why the FTA needs the information in terms of the loss, what are the losses, in terms of the income, what are the income. Because again, there is a certain rules that based on election that may opt or may not opt. So even if you're going to opt, they will say, okay, either you can opt for this relief or election for all, most in case of the branches, foreign branches. As of now, the worldwide income is taxable, but there will be some exception where you have the option to opt the branches to be part of the local taxation, or you may opt no. This will all the branches will not be taxation, because they will not say the loss making you can opt in your taxable, and the profit making branches you will not opt in the corporate tax. They will say either opt all or either all exempt from the corporate tax, taking the relief or election, either all loss making or profit making all together, you will not, you opt out of the scope of the corporate tax. For the better understanding, I'm using the word of out of scope, but it's not the out of scope. Just to opt to take the election, and it will not fall under the taxation. And you, once we reach on that topic, you will understand in a better way.